What's up, Silver Stackers? Thank you so much for being here. This is Silver Slayer, ladies and gentlemen. This is a very, very well put together video. I hope you stick around because we got a lot to talk about in this one, folks. Over a year ago, right? Let me give some context. Over a year ago, I made a video talking about a situation that occurred where a Silver Stacker actually got denied physical delivery on the COMEX. And this is the video you can see right here. Posted it about a year ago. If you look at the comments, most are like 11 months ago. So yeah, it's about a year ago. Now, the article that I covered was actually, they turned it into a podcast speaking about this situation, but the whole point was this happened once, and actually it's happened a couple other times throughout history. But is there a day where you won't be able to turn those contracts into physical delivery? Let me play a little clip from this video, and then we'll go into the other article, which is going to surround the rest of the conversation. So supposedly the COMEX is refusing to deliver silver to a stacker. Now that is scary, that is huge, and this could be the start of something that we all knew was coming. Now we know that the SLB, the PSLB, all these silver contracts, if they were to be turned in, there would not be enough silver. Every ounce of silver that you own in your safe or under your bed in your shoebox or in your safety deposit box or buried 2 feet under the ground in your backyard, theoretically 100 other people own that same silver. But since you own it physically, it's yours. If you can't hold it, you don't own it. But anyways, we have a story, and this was posted on Reddit, where this guy shows that he tried to turn in a contract and they refused it. They denied it, rejected it. Now, what you saw was a little snippet into that video, and if you want to go check it out, I'll post the link in the description. But I wanted to show that because that's where this whole conversation started, is really when I made that video last year when that situation happened in particular. But now I've been covering the last couple of days a situation where the U.S. Mint is in big legal trouble, and that is because laws that they have that other mints and private mints simply don't have, and it's why the silver shortage for the U.S. Mint at least is such a big deal. I mean, they are in hot water right now. They're going up against Congress. Now, I'm not going to go over that. If you want to go check those videos out, I highly, highly recommend it. Highly recommend it. But that's not the point. There's something that what's his name, Patrick Heller, which is by the way a very, very respected person. Something he says that really stuck out. So just to give a little bit of context of how this got incorporated into an article talking about the U.S. Mint having legal trouble with the silver shortage, I got to show you this. So the whole situation with the U.S. Mint is that they legally have to pay spot price for silver, where other mints can pay higher. But the U.S. Mint gets most of its silver from the Sunshine Mint, a couple other places. The Sunshine Mint doesn't want to sell the U.S. Mint at spot because the Sunshine Mint can sell their own inventory at way above spot, so they would be losing money selling to the U.S. Mint. They only sell them the minimum amount, and that's what everyone's doing for them. And even so, to make it worse, even if the U.S. Mint did start to acquire silver to manufacture at their own place, they only have so many workers now and a lot less equipment because of the situation globally. So he's saying, in addition to there being difficulties of the U.S. Mint obtaining sufficient silver Eagle dollar planches from their suppliers, there's also difficulty to actually obtaining physical silver upon maturity of these commodity contracts. So he's saying on top of all that, of what I just explained, there's another situation the U.S. Mint is facing. The New York COMEX allows mature contracts called for delivery of the underlying physical commodity to be settled by one of 4 different options. 1. Deliver of the physical commodity. 2. Cash payment instead of the commodity. 3. Shares of an exchange-traded fund for the equivalent quantity of the commodity. Or 4, we're focusing on number 4, exchange for the physical. Exchange for physical means that the party requesting delivery of the commodity instead receives some cash plus a contract for the same number of ounces of the commodity in the London market. The last of these used to be considered an option only to be used in an emergency, since it was the most expensive way to settle the contract. However, it appears that most settlements in the silver market over the past several years have been by exchange for physical. In other words, those hoping to obtain physical silver at spot price by purchasing a commodity contract and holding it to maturity either will never get the physical metal or only receive it much longer in the future than the maturity date of the original contract. He said, let me read that again. Those hoping to obtain physical silver at spot by purchasing a commodity contract and holding it to maturity either will never get the physical metal or receive it much longer in the future than the maturity date of the original contract. Now, this could also be used as a little bit of a gateway, or I guess even like a cheat code, or I guess you could really call it a loophole to get silver at spot price still, because on the COMEX sells at spot, but to buy a physical ounce of silver, there's crazy premiums. So people could theoretically try to buy a whole bunch of silver on the COMEX at spot and then turn it into physical delivery, right? But anyways, he also says to go on. It's also possible that a commodity market could get so out of order with insufficient metal to deliver, like we're talking about, insufficient metal to deliver against demand for physical delivery, as demonstrated by the nickel commodity market over the past few weeks, that the entire commodity exchange for that commodity could freeze or even collapse. So that's exactly what we're talking about, and that's exactly what was talked about in this previous video I made a year ago. Is there a possibility that the commodity market, the silver market on the COMEX, the SLV, could get so out of order with insufficient metal, as we know, that to deliver, right? Because if everyone tried to turn in those contracts on the COMEX, the silver shortage would be exposed, the market would collapse. And that's also what this podcast talks about, draining the COMEX. It would expose the seriousness of it and the reality. But he even says this. It could get so out of order with sufficient metal to deliver against demands for physical delivery, the entire commodity exchange for that commodity could freeze or collapse. So with the information in last week's column and provided here, which by the way, last week's column, he goes into the legal stuff, the laws and stuff, you now have a better understanding of the difficulty for the U.S. Mint to acquire sufficient silver to meet demand for its products. And this is the article he was talking about where he mentioned last week. This is an amazing article. I covered it a couple times in the last couple of days because there's so much just substance here. But anyway, it kind of goes into, the codes the U.S. Mint's in violation of. I'm not going to share this. If you want to go watch those, I definitely recommend you do. Probably the most important two articles that have been out in a long time. But it's just talking about, the U.S. Mint is having problems. It can't get silver. But I want to go over Patrick A. Heller, because this is the guy that just talked about how the COMEX actually could collapse, right? Where we talked about this situation in my video. Well, he says, so long as the market price for physical silver remains consistently higher than the paper commodity contract price, the U.S. Mint is going to continue experiencing difficulty in obtaining sufficient silver, right? So, and the only way they would even consider it is allowing the U.S. Mint flexibility, but this would always be overridden because this interest, or a strong interest, is holding down silver and gold prices as a major tactic to minimize interest rate on the government's $30 trillion of debt. So this situation isn't going anywhere. Now, Patrick A. Heller, he was honored as a 2019 Fun Numismatic Ambassador. He's also the recipient of the American Numismatic Association 2018 Glenn Smedley Memorial Service Award, 2017 Exemplary Service Award, 2012 Harry Foreman National Dealer of the Year Award, 2008 Presidential Award. Over the years, he's also been honored by the Numismatic Literary Guild, including twice in 2020, Professional Numismatist Guild, Industry Council for Tangible Assets, and Michigan State Numismatic Society, Communications Officer, Liberty Coins. I mean, the whole point of me saying all that is this guy is reputable, and when he says something, he has experience, right? He knows what he's talking about. He has experience to what he's talking about. And even right here, he talks about how he was able to actually talk with someone at the US Mint. Where's it at? It's right here, yeah. So he's talking about at some point the Mint stopped acquiring physical silver on their own. And this is what I was talking about. They went to outside suppliers like Sunshine Mint, Perth Mint, even Royal Canadian Mint. But this is what I wanted to mention. He had a talk with the U.S. Mint director at the time, asked why the Mint was outsourcing its production of silver eagle planchets. He said the variability in demand from year to year during his time as U.S. Mint director, 2006-2011. The mintages ranged from 9 million to 40 million, made it difficult to maintain equipment and personnel for high production years, but also enabled the Mint to trim low mintage years. And that's what I was talking about earlier. You heard me say that even if the U.S. Mint did get a lot of production back, it was difficult to maintain equipment and personnel. That's the big problem. Because right down here, where is it? He talks about that. Where is it at? Yeah, right here. So, therefore, the U.S. Mint runs the risk of only receiving the minimum amount of silver eagles. And then he goes, unfortunately, now the Mint does not have the equipment or personnel to again resume acquiring their own silver, once more creating their own planchets in large quantities, right? So, in addition, the U.S. Mint is obtaining sufficient silver eagle dollar planchets from their suppliers. Also, the difficulty of actually obtaining the silver, and that's what leads into this. So, this whole situation, though, I'm not going to go into, I don't want to go into this. That is the separate video. But you should be able to see now how this does tie into everything. Because if this happens up here, then that could lead to this happening. Do you think that the PSLV could one day collapse? Do you think they could drain the COMEX? Wall Street Silver tried it once, right? And by the way, a lot of people tried to incorporate Wall Street Silver to American Silver Eagles premium skyrocketing, but if you watch the two videos I made the last couple days going over all of this, then you would see it's much deeper and much more sinister than that Reddit little frenzy. Much deeper, right? A lot of people don't know that, though. They don't know that the U.S. Mint has different laws than other mints. And that's why Eagles premiums are so high. But do you think the COMEX could get exposed? Like I said, 800, 900 million ounces trade or whatever. Demand exceeded 1.12 billion ounces this year. Annual production's around 850 to 900 million ounces. They're predicting by 2026 production's like 950 million ounces. That's not enough, especially looking forwards as we head into this new digital technological era with the Green Revolution. So I don't think that it's going to be immediate. I think it's going to definitely take some time. But the situation that happened last year, could that be a glimpse into the future where everyone gets denied? Because this has also happened before. If you guys don't know, it's actually happened 3 times so far. One, and I actually go over it, and we could actually, here, I'll show you the different times this has happened. So, right here, There's been 3 times when physical market fell short of demand for deliverable physical metal. What I was literally just saying. There's been 3 times. 1, the London gold pool in the 1960s. 2, the attempt by France to convert all of its treasuries into gold from the Fed, and that led to Nixon closing the gold window. And 3, the Hunt brothers' run on the physical silver at the COMEX. In the latter 2 instances, the entities making a run on the physical metal had figured out there was more paper outstanding than physical gold silver available to support the conversion of the paper claims. And there we go. That's proof that all that silver on the COMEX is not backed by and also saying that it's not there. Right? All of those contracts are not real like they're said to be. Now, the third one is interesting because that's the most popular, obviously. That's when the Hunt brothers, the 3 brothers, billionaires, owned up to 77% of the global silver production supply. 77% will up to. And what they did was they bought all that silver on the COMEX and then tried to turn those contracts into physical delivery. They tried to turn in 77% of the global silver supply into physical. Now, the government obviously wasn't going to have that because even back in 1980, yes, it was a while ago, but they still needed silver, right? There still was a digital age at that point. They were still in some digital era, not today's extent, but silver is still used in everything. And the government would only be left with, 33% of the world's silver. And that's just United States. So what they did was they banned silver on the COMEX. It was called Silver Rule 7. They banned silver. You could not buy silver on the COMEX. You couldn't you couldn't sell it to your friends either. You had to sell it back to the government. You had to. And it was illegal not to. You had to turn it in. And what banning silver on the COMEX did was caused everyone to panic. Now remember, silver was $50 at that time. The highest silver's ever been, still till today. Government banned silver while it was the highest price ever. And banning it caused people to panic sell, obviously. And what happened? It went back down to $8 as where it previously started before that massive bull run. The point of me saying that is, though, that the government was willing to, on the spot, make a law and ban silver on the COMEX. Now, the situation in today's time would be nothing like that, but it still would be a situation where the COMEX is corruptly doing something out of other people's will on the spot, and I do think that the silver shortage is something serious enough for the government to do. I mean, not Silver Rule 7, but to something of that nature. Like I said, there is literally not enough silver in the world, above ground even, for that to happen. And that's just the investment sector. Remember, guys, we're just talking about the investment sector. We're talking about coins. American Eagle's 13 million per year or something. But the industrial sector, we're talking about 900 million ounces plus. Demand exceeded 1.12 billion ounces this year, but the investment portion of that is very, very, very small. Most of that silver is used for electric vehicles, EVs, solar panels, 5G towers. So there's a lot going on. A lot of silver is needed in a lot of different places, and plus, as silver price starts rising, more investors are going to get into the market. So you only have the U.S. Mint now with demand, which broke past 5 million ounces the first month of January this year. But then you have more people like you and I, more silver stackers forming, but then you have EVs booming and the whole world going solar, zero net emissions by 2040. You could see how ugly the situation could get, and also why, and even more reason of the COMEX actually falling apart. So yeah, that's what I think. Let me know what you all think as well. Hope you enjoyed this video. If you think this video is now worthy of a subscription, please do. I'm never going to ask you to subscribe in the beginning of the video because I'm not going to write a blank check. I'm not going to ask you to do something before I've done anything for you. If you now think that this video is worthy for a like, and it's worthy, or my content is worthy to subscribe to and to continue to watch in the future, then please do. I would love to see you around. I make lots of diverse content, lots of giveaways, lots of unboxings, lots of different stuff. I want to take a second to give a shout out to my channel sponsor, BullionMax.com. I'm honored to be working with one of the best bullion dealers online. Great prices, great deals, and by far the best packaging out of any company that I've ever seen. They even offer a silver starter kit, which is 5 ounces of silver at below employee pricing, with extremely high premium coins for a great deal. It's only one per household, but a great way to lower your dollar per ounce average a bit and get a chance to grab some great coins. So shout out to Bullion Max, such a great company, always sending me silver to give away to my subscribers as well. BullionMax.com, and if you want the starter kit, go to BullionMax.com/SilverSlayer. And also make sure to go to AG47Apparel.com if you want to express your love for precious metals with the clothes on your back. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.